Yes, question number 22 is an MTP question. It may appear in MTP, it may appear for 4 marks. So within 4 minutes, you should get this. QA issued 10 lakh 8% long-term bonds, series 18, okay, A series of 1 rupees each on 1st April 2016. The tenure of the bond is 3 years. What type of bond it is? Conventional bond, because they are given you the year and the coupon rate. Interest is payable annually on 1st of April every year. Right now, no much headache. But when you have to prepare a balance sheet, there is a classification called, like, now you have to see on 31st March you didn't pay the cash. There's one liability there. Because on 1st April you are going to pay it. The investors expect an effective interest rate of 10%. What is this effective interest rate of 10%? You say, sir, effective interest rate is that amortization. No, but see the language. Investors are expecting, that means the expectation is 10% discount factor. Simply, I say use the word called effective interest rate. Okay, no problem. No, they can use it. They can use any English language. What is meant? But what do we understand with this 10%? Market rate. QA wants to suggest the suitable accounting entries for the issue of the bonds as per the applicable Ind AS. So you want to just pass one accounting entry here. Question number 1. Consider the following discount factors. 3 years, 10% discounting factor they have given you already, annuity factor also. What is the principal value of the bond at the initial recognition at the time applicable? Can you tell me what is the principal value of the bond? When you pass an accounting entry, initial recognition entry, what is my principal value of the bond? Question is clear? They asked you, okay, they have issued one bond. It is a financial asset or liability? Financial liability, because Q issued, and you have to pass in the books of Q here. They said, what is the principal value of the bond at the initial recognition? If you are going to account it as per Ind AS, when you say fair value, you talk about fair value with the 2 streams of payments. No? In this bond, how many streams of payments are there? 2. What are those? Interest and principal. When you say fair value includes present value of the interest and present value of the debt. Did they ask you that fair value? In that fair value, what is that contribution done by the principal? Which you know. Only didn't understood this question. Don't you know? You know it. They are asking you, if you calculate the fair value of this bond, this fair value will come because of 2 calculations. One portion is principal, one portion is the interest. You must have discounted principal with the present value factor, discounted with the present value annuity factor. What is this value they are asking? Don't you know this? What is this? 7 lakh 50, array, baba, 10 lakh into this factor, you say 7 lakh 51. 1 mark straight away, no. But see the language what they use. Then they ask you, what is the present value of the interest payments? Take the interest 10 lakh into 8% into the present value annuity factor. Then they ask you, what are the proceeds of the sale of the bond to be recognized at the time of initial recognition? What are the proceeds of the sale of the bond to be recognized at the time of initial recognition? What they are? They are asking you fair value. Total of these 2. What is the accounting entry to be passed? When? First year end. For this, I need the first line of amortization schedule. First line of amortization schedule I require. Simple question, no? Simple question. Okay, we'll solve this. Right? 1. Principal value on initial recognition is 10 lakhs into 0.751315. 7 lakh 51,315. 1 mark straight away. Done. First question they asked me, I told. Second, present value of interest, 10 lakhs into 8% into 2.48685, 1,98,948. Chalo, one more mark. You wish no, this question should come to you. Third question, what is the bond proceeds to be recognized? Bond proceeds is full 10 lakhs. But out of that, how much you will recognize as per 109? You will say, sir, I will not recognize full 9 lakh. I recognize 7 lakh 51 plus 1 lakh 98. I will recognize only 9 lakh 50. Did they ask you initial recognition entry? No. They asked you, what is my journal entry at the end of the first year? What is my entry? Huh? Interest? Interest expense account debit. Followed, no? This part is clear, students, everyone? Okay. I will write then. Should I prepare an amortization schedule? Not required, no. You remember one asset, we have done that. Without amortization schedule, only 4th year interest we calculated. So my accounting entry is interest expense account. Because it's the loan for me. In financial asset, interest income. Take to P&L. Debit. How much? Huh? Sorry? 80,000. 95,000. 26. How much is my interest expense? One thing I want to know. Huh? 1 lakh. 1 lakh. See, if I have to pass this entry, should I prepare amortization schedule? Okay, let me prepare an amortization schedule. You need not prepare, I will prepare. I will write here year 1, 2, 3, whatever it is. I don't need actually 2 and 3, no. Because they asked me only first year entry, no. So I will remove why I have to write 2 and 3. What is my opening balance? 9 lakh 50,263, right? This is my initial recognition because always my amortization start with the initial recognition value. What is my EIR? 10%. So it comes to 95,026. No. Understand the logic. And you said coupon rate, Dhanashri. 80,000 is the coupon rate. That is the cash payment. That is not interest. Is it my interest expense? It would have been if my market expectation and the coupon payment was one and the same. And there is no transaction cost. Then 80,000 is my interest cost. If my coupon rate, which is 8%, is equal to market rate 8% and there is no transaction cost, then my interest expense will be 80,000 rupees. We will pay 8%. That's why CAF, cash flow, will be 80,000. They asked you what is your journal entry you are going to post at the end of the time. Accounting entry for payment of interest for the first year. Okay, so okay, maybe in the somebody may interpret it that way. But what institute is telling, they are passing entry for the interest recognition cost. To pay, should you not recognize it? Which entry is important? Payment entry is important or recognition entry? See, to pay, should you not credit someone? Followed? No. That entry is very easy. What I understood your interpretation. Your entry of liability account debit to bank 80,000 is a very simple thing. But what institute is trying to expect? They want this entry to be posted. Followed? No. So my accounting entry will be interest expense account debit 95,026. You can say bank or whatever. You can call it financial liability. Because on 31st March you didn't pay, no. How much? 10 lakhs into 80%. And the differential amount will go to a long-term bond. So if you prepare an amortization schedule and start with 9,50,263 at a EIR of 10%, your amortization schedule is going to close. Easy question, no? Understood, students? Very clear, no concepts? Concepts are very clear. If you want, you give more entries, you give both the entries. But this is what they are expected. So look into the question, try to understand and try to figure out. Because those are not example questions, they are examination questions. They will try to understand, okay, how do you think? Okay. So we'll move on to the, yes, that's it. Issue of debt. There is only one question I could find. So we'll do one bank borrowing